Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Ganesh Swami, welcome to the Blockchain Show. How are you?
I'm doing great, Ethan. Pleasure to be here.
It's great to have you here. I suppose maybe a good way to get started before we talk about Covalent, maybe you could tell us a little bit about your background, how you got interested in blockchain, and we can take it from there.
Yeah, great question. Great place to start. So I'm a physicist by training and worked on cancer drugs for about half my career. And I got a little disillusioned with that industry because of the way pharmaceuticals are financed and products taken to market. It takes about a decade to take a product out to market, which I felt like my life was slipping away. So I made the move into databases and just general cloud data infrastructure about a decade ago. And that's where I got my training wheels on. About 4 years ago, a friend of mine pointed me to a hackathon, a database hackathon that was here in Vancouver. And Vancouver rains a lot, so this was a sunny or a rainy Saturday morning. I show up to this hackathon and decide to build something, and built a quick hack over those 2 days, and ended up winning that hackathon. So that hack is what is today Covalent. And it was quite accidental because if it were not raining, if my friend didn't tell me about this, if just the timing, I would not have entered the crypto industry, because I thought, from my experience in blockchains, which I'm used to, tens of thousands of transactions per second to 15 transactions per second on Ethereum was kind of a joke. So I mostly wrote it off, and it was that hackathon that brought me in. And then there's a full journey after that, but that's how I got into the space.
So you had the initial idea at the hackathon, or was it kind of in your mind before?
I had an idea that I wanted to just play with and test out. And in my experience in the industry, it doesn't matter what industry it is, for a new technology to be adopted by existing businesses, you need an on-ramp. You need some kind of middleware. You need some kind of interface that allows your existing tools, existing talent, existing processes to work with this new technology. And there's always legacy systems that needs integration on the back end. So here, what I had built is a way to pull blockchain transactions into Excel, because the number one product for analysis in the world is Excel with 1 billion plus users. So if you can pull blockchain transactions in Excel, then it enables a whole suite of applications downstream. So that's what I built. Just a very simple hack where you open up this Excel sheet and it shows you all your blockchain transactions, and then you can do your taxes, you can calculate your P&L, you can do whatever you want. You can look at the assets, you can run a simulation. It's up to you. So that's really what I built. Just a useful piece of software to connect your existing softwares with blockchains.
Yeah, that's excellent. Data is something that fascinates me, statistics in particular. So I was really kind of intrigued just being able to have a really good, modern approach to integrating massive amounts of data. I'm kind of curious, initially, who did you think would be the prime target for using this technology, and where do you think it can go, outside of business maybe?
Yeah, so this is where it gets really interesting. This hackathon was late 2017, so just as the previous bull market was dying down. And 2018, 2019 was really tough, very dark moments there, because there was just no market. It was all bare. Everyone was bearish. Investors had left, builders had left. There's just nothing to do. And so the first 2 years, we had no customers, no traction, no revenue. We had to bootstrap the company because there are no investors either. And what we ended up doing is, just because of our conviction that the timing, the time would come, we continue just to refine this piece of technology. And the goal has always been business to business kind of product. Because business is what I understand in doing sales and going to market. I don't really understand the consumer space. I would never build a retail product, for example. And so when 2020 came around, that's when it was very clear we had product market fit. the company became profitable. Then we went out and raised our first round of capital, and things just started snowballing from then. So initially, our idea was that we would target the crypto native use cases, people who are only live on the blockchain. And then eventually what will happen is traditional businesses will adopt blockchain technology. So now our vision or our opportunity is any business that has digital assets on their balance sheet. They don't even have to be a crypto company. They don't have to have a process in the blockchain. They just need to hold on to stable coins, for example, will require Covalent somewhere down the stack. So that's really how we're seeing the markets play out.
Aggregating data from over 32 blockchains, over 1,000 decentralized applications. I'm sure much more to come in the future. Some people are really, I don't know what the term would be, but they're really good at keeping receipts. They're really good at putting everything in Excel. That they're very
organized.
Yeah, organized. There you go. Do you think that it's something that maybe people who aren't organized could help them become organized, or is this something that's more for a particular type of person? Sorry, that's kind of a bad question.
No, it's actually a great question. So I'll take a different take on the question. So the idea is that would it get people more organized? And I think yes, because the blockchain never forgets, right? Everything that's on the blockchain is immutable. So you can go back to any point in history and then figure out what exactly that transaction is. And the flip side of this is that blockchains are actually bad for illicit behavior, for terrorist funding, for money laundering, because the blockchain never forgets. It leaves these breadcrumbs that can never be erased. So when the regulatory bodies come and say there's a lot of illicit behavior happening on blockchains, that's actually false, because as a percentage, there's not a lot of money laundering that happens on the blockchain, because everything is quite transparent, everything is public, everything is traceable. So that's how I would think about this, as in this technology is being used for actual legit use cases. I would say in a twisted way, speculation is a useful, legit application of blockchains, just like how gambling is a big industry. It's a use case. I don't want to put a moral imperative on gambling or speculation. It is what people do. So that's how I would consider that question.
Yeah, it's very well said. I like that aspect of most blockchains is kind of pseudonymous, and you can track things, and I guess I'm playing the devil's advocate here, but starting to see a lot more projects emerge that try to make it more anonymous. Does that make any problems for what you're trying to do? Because there's been a few different projects that have failed, but a few more that we've spoken with recently who tried to kind of mix up the transactions to make it more anonymous. But is that data still able to be aggregated, or is it just kind of lost through all the different mechanisms like side chaining and cryptography that builds on top, if that makes sense?
Yeah, it's a great question. So I'm on two sides of the fence here. I have a feet on both sides of the line. On a personal consumer level, I feel that I should have full privacy with my transactions. Nobody needs to know how I spend my money. I pay my taxes. It's up to me how I spend my money. I don't need other people's opinion on how I allocate my time and my resources. On a business side, it's bad for business, because if things are not super transparent, Covalent becomes less useful. So if that becomes a norm, then we'll rely on disclosures that have to be made. And I think we'll be back to the previous thing, where the whole point of putting everything on the ledger is to be public and transparent. So it straddles both worlds. And I think generally anything that is funded by taxpayers' money, any government entity, any research institution, should be transparent with how they spend the funding and the resources. And all of that has to be on the blockchain. There's no reason to encrypt that information on the blockchain or have any kind of privacy. So I think there are those kinds of entities. Like even today, salaries of civil servants are put on in a public ledger, in a database, and it's published on websites. I know that's definitely the case down in the States and here in Canada. So you can just go look up any employee's salary and the benefits and so on. And that's what it should be, right? Anything that's funded by taxpayers' money you owe it to the citizens to disclose that data and have transparency. But private businesses, private individual, I think it's more of a barrier to adoption if everything is out in the public. I don't want other people to judge me for how I spend my money. I need my privacy. So I definitely think on an individual level, it's a barrier.
Yeah, that's a good way to put it. Like you said, most of the data people put on the internet is easily trackable anyways, but going through the blockchain, I think, is a much more sound way to do it. We're seeing like an explosion the last couple of years, I suppose by now, of NFTs, different financial approaches through DeFi. There's so many wallets, there's so many new chains. It just seems like a really good tool to be able to see what's going on. I can only imagine the power that this would bring to different individuals and companies. If you wouldn't mind just kind of walking me through, what a new user would experience, an onboarding type scenario.
Yeah. So let's take a step back and understand what the landscape looks like. In my opinion, there's three verticals that are ripe for blockchain adoption, and it's starting to happen. The first is this DeFi fintech kind of merge, where you have traditional fintech companies that are starting to adopt blockchain technologies, show the digital assets and so on. Recently, Robinhood announced a Web3 wallet. So that's pretty exciting. There's more and more of these companies coming in. And if you look at the younger generation, they have their NFTs, they have stable coins, and they want to see everything in one single portfolio viewer. So that's like a thing that's happening, which is pretty exciting. The second is the whole NFT craze. And what's exciting here is not just the face profile pictures that are, there was a big hype about that last year, but it's all these big brands like Tiffany's and DAG that is now issuing loyalty points as NFTs on the blockchain. And if you look at the sales for some of these NFTs, they're in the tens of millions of dollars. So not just like primary sales, but secondary sales as well. So there's a whole economy that is starting to emerge around that, which is pretty exciting. And then the third thing is the GameFi space, where multiple AA, AAA studios are now building a blockchain component to expand their portfolio of applications and games that they have on mobile games, on console games, maybe social games, and then now blockchain games, where you have that P2P kind of trading, custody of the assets is stored by the user, and so on. So that's generally our parlay on how we see the market evolving, where we see a lot of traction. We have over 4,000 customers on the Covalent API today. So with that as a context, what Covalent is a developer's product. It provides an API. So it's not meant for a retail user. It doesn't have a UI. It doesn't have buttons you can click. You can't really see charts. What it does is it's a middleware kind of product where a developer has to integrate with Covalent to pull the data, and then they can consume the data and showcase that in any format that they want. So with an analogy, what Covalent provides is a can of tomato sauce and some pasta, and whether the developer makes lasagna or something else is totally up to them. So it's the raw ingredients that goes into a retail product. So we are seeing use cases in GameFi and NFTs and fintech, and it's up to that developer to understand what the market needs are. So we're a step behind that with the underlying infrastructure that powers a lot of these use cases, but we're not that end user kind of use case per se.
So what's the most powerful feature that you see developers utilizing?
So there are three primary use cases of the API today. The first is to build wallet applications. So if you open up any wallet, what you see is a list of your assets. You tap into one of your assets. It says all your incoming and outgoing transactions for that asset. It probably shows your chart over the last 30 days. This is the value of your assets, a portfolio view. So Covalent is an excellent tool to power all of those viewpoints across 50 different blockchains. So we have the broadest coverage in the industry today. So that's number one use case for us. All major wallets in the space, Rainbow Wallet, Blockchain.com, XDeFi, MetaMask, so on, they just all use Covalent under the hood. The second kind of big use case is to build investor tools. So here, if you have an NFT, you want to see all the floor price. You want to understand what exchanges this NFT is trading on. Where is the custody of these NFTs? You just want to do your due diligence. You want to have investor-ready tools. So it's a very popular use case to use this data and design investor products. The third is the taxation use case, where you want to understand essentially the cost basis of your positions across all of the digital assets that you own, and then use a engine to calculate your tax liabilities. So that's a very popular use case, and we see a lot of crypto tax providers using Covalent as a data source to enable that use case.
It's fascinating, actually, because it just kind of makes me think this is going to be an incredibly powerful tool for historians going forward, because never before in the history of humankind have we had the ability to track something of value so well. You say there is something in the future that historians want to see, how many times did this NFT exchange hands? Like in the past, we had auctions and we had people who made a lot of money verifying if things were real or not. And, you had to trust this piece of paper that was from the 1800s and signed by so-and-so. But now we're going to have quantifiable data, and you can see how many different times it was transacted. And it just kind of has my mind spinning thinking about all the different historical use cases it might have. Sorry, it's kind of a tangent there.
No, it's you're exactly right. I think there is a lot of value in having a ledger that's immutable and that's cryptographically secure, so it can be tampered with. People are not changing the facts after the fact. It's a legit record of what has actually happened.
Yeah. As far as the wallet interface, is that something that's just kind of like a baseline code for developers to make their own version, or do you have a wallet that you provide for them to use?
Yeah, so we provide a bunch of things, but we don't provide that end user interface because we want to encourage a diverse set of viewpoints on these wallets. And I think NFT style wallets need to be designed as an NFT viewer. GameFi related wallets need to be designed with a gaming theme, right? So we don't want to constrain what developers and end users come up with. So one of the magical things about Covalent is the unified nature of the API. So there's hundreds of blockchains out there in the world today, right? There's just lots of blockchains. And all of these blockchains are unique and bespoke in their own respective manner. Sometimes they're thinly differentiated. Sometimes, it's a great differentiator on how it works. For example, Ethereum was proof of work. It recently moved to a proof of stake, so that's more energy efficient. But from our perspective, I think there has to be one single unified interface to access all of this data. So the person who's consuming this data does not need to know the nuances of that blockchain under the hood. They don't really care if it's proof of work or proof of stake or any other like technological bits, because all they want is the data, and they want to understand the data and showcase that data and do the research on data or build their tools. So Covalent is the only API today that offers a unified interface across all of these dozens and dozens of blockchains. So we've gone through the hard work of normalizing and canonicalizing all of this base layer data so that for the developers, they only need to understand the Covalent schema or the Covalent structure once, and all of the dozens of blockchains are now accessible using that same interface. So from a wallet perspective, if you have, let's say, stable coin like USDC, it doesn't really matter if it's on Polygon or Ethereum or Arbitrum or any of the dozens of blockchains. It shouldn't matter. It's just dollars, right? It doesn't matter if you have US dollars in a coffee cup or US dollars in your bank account or under your mattress. It's still US dollars. It doesn't matter. So if you have a catalog of all of your assets, it shouldn't matter where the assets are. Because that's the end user experience. So that is the vision we had in building the unified API. So for wallet builders, wallet constructors, it's literally one API call that shows you all of the assets, another API call to render that portfolio view, another API call to get the inflows and outflows of your assets, So all of this is like super, super, super simple, right? It's purpose built for building a wallet application. So we have some tutorials. If you look at all of the hackathons that we sponsor, we do about 4 or 5 hackathons every month. So very active on the hackathon scene. The primary use case there is a wallet kind of interface, because people are super diverse, right? They want to build Chrome extensions, they want to build, Apple Watch interfaces, and they just want to see all the assets. They want to get triggers, they want to get like all kinds of like funky little things, which we just provide the building blocks for.
Yeah, that's awesome. I imagine that it's going to save developers a lot of time. So that's excellent. Yeah, I wanted to talk about price movement and market trends, because we're still kind of in a downturn in the market. It seems like there's not a whole lot of buzz around this particular space, which is common. We've been through a few by now. I like these moments because then we can kind of focus on the tech, and there's less hype about people getting rich, that sort of thing. It just seems like you have so much more knowledge on how things are moving right now. Is there anything you want to comment about that?
Absolutely, Ethan. This is a very important point, and I'm glad to share my thoughts here. So I think a bear market is a gift for projects like Covalent. These kinds of moments is where you get a lot of clarity on what's working, what's not working. It gives you some breathing room on rebuilding your infrastructure, because the previous bull market was so intense that a lot of our systems, we've just accumulated a lot of debt that we need to clean down and write down. Also, for projects like Covalent that has a very strong vision and conviction in the space, we recently announced the Alchemist Bootcamp about 2 weeks ago. So this is a 4-week program that teaches you everything about on-chain analysis, makes you an expert. And our idea is that these builders, these pioneers who are entering the space during this bear market will pull the industry out of this bear market into the next bull cycle. So we were expecting, maybe 100 applicants, right? Because we thought it's a bear market. Who's going to be interested in learning about data? We were shocked when we got close to 1,200 applications. So it was incredible to see the response and the excitement and the energy that people applied. And this is not just a simple form. You have to record a 1-minute video on why you should be qualified to join this program, and you have to upload your resume. So last week, all we did is went through like hundreds of resumes and video interviews every day. And this week, we're going through 80 10-minute interviews face-to-face with all of these applicants, and we want to whittle it down to about 200 people. So that's what we're seeing. And I think this is true across the industry. The builders are not going anywhere. Our hackathons continue to be well received. ETH Online was a hackathon we just wrapped up last week. There were 55 unique submissions using the Covalent API. And this is a hackathon with a few hundred hackers. So the builders are here. The builders are going nowhere. So what is going to happen is the builders will go in and fix the existing stack. They'll come up with new use cases. They'll invest in the future. And then when the time is right, things will get into the next bull cycle. So we're not going anywhere. In fact, like I said earlier, it's a gift for projects like ours. There's a lot of distraction. The tourists are leaving, and the guys who remain will be richly rewarded, not just in terms of prices and stuff, which is not really my focus, but in terms of actual technology that's getting adopted by the broader market. So that's my take. It just shows you how much conviction I have in this space. It's not our first time through a bear market, and I enjoy these moments because it's a lot calmer, a lot quieter. People actually care about the tech as opposed to just prices, and you get higher quality of people who are sticking around.
Yeah, that's very encouraging, actually. On that topic, in terms of mainstream adoption of Web3, do you think that we're getting there, or what do you think needs to happen?
I have a thought that is probably controversial. I think we're at least 2 cycles away from mainstream adoption. And that means that, my parents or my grandparents using crypto products, right? At least 2 cycles away, which is, I think, 5 years out. And I think we're getting there. So the analogy I'd like to look or think back to is airplanes and airports. When the first airplanes started coming on the scene, there were no airports. There was no infrastructure. So airplane is the application, airport is the infrastructure. And then these airports were being built to service these airplanes. And then that led to a bit of a mass market. And then eventually the airplanes outgrew the airports, and then the airports had to be rebuilt to service the next generation of airplanes. So it's a seesaw movement between airplanes and airports. It's the same in the blockchain space with applications and infrastructure. So what every bull market tells you is how the infrastructure breaks, and then the infrastructure levels up to service the next level of use cases. So it's always a seesaw moment. So if you think back to this bull market versus the bull market in 2017, stable coins is an example, which didn't exist in 2017. There were no stable coins in 2017. Now you have USDC, USDT. Like I can't imagine a world prior to stable coins. Bridges are available. Still, there's a lot of hacks, but bridges are available now. Indexers like Covalent are available, like data products like Covalent. NFTs were, I think there was just CryptoKitties back in 2017. Now, NFTs is a whole big thing by itself. So a lot of these things are coming in as an infrastructure level, which didn't exist in the previous cycle. So the next cycle, there'll be new use cases that breaks the existing infrastructure, and it'll start to level up. So I think we're still two cycles away from applications holding ground before it's mass market. If you look today, there's probably 10 million crypto users. That's it, just 10 million crypto users. And there's with GameFi and NFTs, the next cycle, maybe they'll get to 100 million users. If you look at the existing players that are coming in, to get to 1 billion users, I think it's 2 cycles away. So that's my take on the timeline.
Really good take. It's interesting about infrastructure because sometimes I just marvel at like how it's working right now. It's like all right, yeah, it's working. That's amazing. When are we going to break it? At what point are all of these different blockchain projects going to start slowing down the internet for everybody else in the world? Are we going to have to lay more fiber optic cables on the ocean floor? Are we going to have to rethink how we wire the planet? What is the next version of the airport? Do you have any thoughts on that?
I cannot predict the future. I think it's there's a lot going on, a lot of experiments, but hindsight is always 2020. I would not have predicted stable coins or bridges or indexers to be a thing at the end of the previous cycle, but we happened to pick a spot where it blew up. So our timing was perfect, but it took about 4 years to get there. And I'm excited for a bunch of things. I think the on-ramps should be like pretty slick. I would say, day-to-day people would accept stable coins. I think that's magical.
Yeah, I hear that. I wanted to talk about entrepreneurship because during the last lockdown, a lot of people decided, I want to switch careers. I want to become an entrepreneur. I think people who knew about crypto, people who were developers, they saw a real potential. I don't know if that has anything to do with a lot of the new projects I'm seeing or if they just had more time during the pandemic. It's one thing like having an idea and building it, but it's a whole new challenge bringing it to market, whatever it is that they're trying to create on any of these Web3 applications. Well, what are your thoughts about that for people new to the space, or maybe they're not new to the space, but they're new to bringing products to the market?
I would say focus on the use case. I can only speak about the B2B use case where money exchanges hands. I have no exposure or no experience in retail or consumer products, so I can't speak to that. But in a B2B space, I think it's a lot simpler to get your project off the ground. Now, scaling that is a different challenge, but I think at least that initial product market fit, you can hack your way through to finding that. And it comes down to a very simple set of tenets, which is, are you solving a genuine problem? And is that problem like the top 3 things that the end user has on their mind? So in reality, is it a painkiller or a vitamin? And if you get these 2 things, then it's just a matter of going out there and finding your first 10 customers. Once you find your first 10 customers, then you can find your first 50, you can find your first 100. So that's what it comes down to. And then you can start thinking about scale. You can think about, recruitment. You can think about all of the other things that to build a giant platform. Now, entrepreneurs have a second choice here, which I think is pretty exciting, which is the choice that we made, which is to build a decentralized platform. So where you may basically build a public good that furthers society. So it's not a commercial entity that's not meant for profit and so on. So that's the choice that we made. So Covalent, the underlying infrastructure, is a public good, and it's almost like we've given the thing away to the world, to the universe, to better it. And now random people from across the globe have joined forces with us on this joint mission. So I think this is a very interesting kind of concept that is being explored with crypto networks, because most crypto networks should be public goods. So that's another option where you're aiming higher rather than just your day-to-day profits and revenues. So that's how we're thinking about entrepreneurship. I think it's a pretty exciting time to be an entrepreneur. Times like this, if you were to enter a recession, people say there's a recession coming soon. If you are to enter a recession, then the best companies were built during downturns or during recessions. So yeah, I would say if you're looking to start a company, now would probably be the best time to start a company.
Back on the topic of trends and analysis, let's say within crypto, like NFTs, DEXs, wallets, and so forth, have you noticed more traffic in any one in particular? Or maybe, kind of what are your thoughts on where you see some of the trends going?
So overall, the numbers are down, right? With a Luna hack, with the prices being depressed, that's just a thing across the board. So I would say it's new use cases that's really exciting, right? If you look at the NFTs have dropped in pure dollar terms, but haven't really dropped in ETH or SOL terms. So if you look at the native currency, so they're not really down per se, right? In dollar terms, yes, they are, but ETH or SOL, they're not really down. So I would say these emerging use cases, which are yet to be discovered, yet to be find product market fit, is where a lot of the excitement is. If you look at the games that are coming on the blockchain, like Shrapnel announced something a couple of days ago. We were the first to index these Avalanche subnets. So these app chain thesis, this is like brand new. We've indexed those app chains, and if you look at the games that are on these app chains, it's really exciting. These are brand new use cases, brand new technologies that didn't exist 6 months or a year prior. So what this is going to do is it's going to really, really grow the space massively. In the grand scheme of things, I think it's important to put everything in context. So if you look at the number of developers in the entire world, something like GitHub has 30 million developers on their platform. Something like the blockchain space has 300,000 developers. So that's 1% of the entire developer base. And something like Covalent has about 35,000 developers on the platform. So it's 0.1%. So we are 0.1% in our mission to create, to get developer adoption, right? So 0.1%. So we haven't even started in our mission to make blockchain data accessible. We are probably heading towards the front door and maybe putting our shoes on. We haven't even left our house. So I would say it's so early, so nascent in a lot of these things that I think the growth is yet to come.
Wow, that's kind of astounding, really. I mean, are we going to have enough developers? Are they even out there? And like, what is it going to take to attract more talent? Man, that's wild. Did you have a background in coding at all when you were younger?
Yes, I've been programming pretty much all my life. So since my teens, but not professionally. I went down the pharmaceutical route, and it was mostly data. But even today, I'm not. I code once in a while, but I think our software engineering team are more capable at it than I am. So when I want to explore new ideas, I just whip up simple like prototypes and stuff, but nothing serious.
Yeah, well, that's good. The reason I ask is, I've got children, and I sometimes I wonder, should I set them down this course, because they've shown an interest in it. And, it's just so much potential. And like you said, there's just not enough developers yet. And I'm just kind of curious, for maybe younger people or people who are a little bit older and want to switch careers, what's the route to get to be, like a Web3 developer? Do you start off in the traditional programming and developing route, or are there ways to kind of skip ahead a little bit, skip a few grades in class kind of thing?
Yeah, I think what's exciting over the last 5 years are these coding boot camps. So you don't necessarily have to go through a 4-year college degree to become a programmer. That's one option that's available. But if you're further down your career, you have other kind of commitments, taking 4 years off to go to college is probably not the best investment you can make. So here are these coding boot camps that in 90 days or less, you're able to build very simple prototypes. You're able to build lots of interesting projects, and it just gets you off the ground. So I think that's a very valuable avenue to get technical and become a programmer. At Covalent, I think we have 2 or 3 people who have gone down that route, and they're very valuable members of the team, and they're able to ship software. They're able to reason about it. I would say from a business perspective, they have a background in hospitality or operations, which transfers to the programming if they're building business software. That's very compelling because they're able to empathize what the user's journey is, which typically people who are, who grew up playing video games and just been coding in their basement, don't really have that empathy for the end user. So I would say, I think the world requires more diverse perspectives and more diverse diversity in general. So I think that's a very valuable avenue that's available to people who are further down their career to go to a coding bootcamp.
Yeah, that's excellent advice. Yeah, well, this has been great. I really appreciate and value your knowledge and insight. It's an exciting time in this space still. I'm constantly amazed, and thanks for sharing your knowledge with us. I just want to give you the opportunity to leave us with anything you'd like to close with, maybe where people can go, anything really. If you have any final thoughts, please.
Absolutely. So I think if you want to learn more about Covalent, go to covalenthq.com. That's our website. We're also on Twitter as @Covalent_HQ. I'm available on Twitter as @GANE5H. We're all active on all social platforms. The Data Alchemist unfortunately closed applications as of end of last week, but we'll have a second cohort next year. So keep your eyes peeled for that. It's a pretty exciting program. What's unique about that program is we pay you to go through that program. We pay you $2,000 to go through the program. So there's a lot of excitement about that. If you're in this space, hold strong, ignore the prices. The prices will come back up when the use cases come back up. So stay along for the journey.
Awesome, Ganesh. Well, thank you so much for your time. You're doing great things, and I appreciate you taking the time to be with us today.
Ethan, thank you. Thank you for this interview. I really enjoyed it.